my colleague, is standing by. He ferrets through the Bhavcopy segment every day, and this is his special Bhavcopy segment. He's talking about stocks that are buzzing in trade as a result of zinc prices globally being at 5-year highs. Take it away, Mangalam.
Indeed, Lata. So yesterday, Manisha, our commodities editor, sent an alert that lead and zinc prices are at 5- and 9-year highs respectively. And this is interesting primarily because in the last fiscal itself, lead prices actually fell to the lowest levels since 2010. And since then, as Nigel has been pointing out too, Glencore has cut its capacity, as have some Chinese smelters. So the lead prices as well as zinc prices have recovered. Now, lead prices and zinc prices, Nigel tells us, moves in tandem, and because of which we're seeing some movement in a lot of the stocks. The stocks should come up for you. We have the likes of Pondy Oxide and Chemicals doubled since the start of this year, as has Nile and Gravita, which has gained almost 50%. It's buzzing around today as well. The stock that stands out clearly is Pondy Oxides, for the simple reason that despite moving almost 45% this month and 90% this year, the company is India's largest secondary lead producing source. Now, why call it secondary lead producing? Because the raw material, instead of mines like Hindustan Zinc has, their raw material is actually scrap. So they source raw materials from users directly who discard lead scrap, as well as some scrap yards. And 50% of their revenue, while it is exported, the domestic part, 50%, most of that, in fact all of that, is given to Amara Raja batteries, and that is the next growth trigger for the company, because the growth in auto industry and the growth for replacement batteries, as Sonia keeps pointing out, is a big trigger. Last year in FY16, auto industry grew at 8.6% versus 2.6% in the previous year, and this year too the auto stocks have been buzzing around. Additionally, the company has announced its foray into new markets like USA, Europe as well as Thailand, but they have enough capacity. Their current lead and lead alloys capacity is close to 50,000 metric tons per annum, and they are operating at 80% capacity utilization, so they do have that 20% headline. And at the same time, they have added zinc and zinc oxides capacity too, which will come on stream in April 2017. Now, before I go into their numbers, the company demerged their manufacturing and trading business in FY15. The demerged entity trades on the BSE under the name of POCL Enterprises with a market cap of 50 crore rupees. So all the numbers we have to look at from FY15 itself, because before that it won't be comparable. So FY15, you saw sales from a move from 373 to 465 in FY16, and H1 itself they've done 334 crores, which is 70% of what they did all of last year. The margins have steadily been increasing too, from 4.6% to 5.8%, as has the debt been increasing. So that's a red flag. The debt was up from 57 crores to 112 crores in the last 2.5 years, but that hasn't deterred the bottom line from growing, because if you look at the EPS, has grown from 12 rupees to 18 rupees in the last year. In the first half of this year itself, the company has done 18 rupees, which is as much as what they did last year. This is an industry-wide phenomenon, so you'll have the likes of Pondy Oxides, Nile and Gravita coming in, where they have posted better EPSs in the first half itself as compared to all of last year. But why this company stands out? Because if you look at the sales, that picture should come up for you as compared to the peers. The sales for Pondy Oxides is at 465 crore rupees, which is the highest in the industry, as are the margins. Most important to watch for equity analysts is the return on equity, the maximum bang that they get for the buck. And out here, Pondy Oxide stands out because it's got 28% ROE as compared to 10% the next competitor, and Gravita, which is at around 4.6%. Now, finally, the valuations. They trade at 8.5 times FY17 earnings as compared to 10 times Nile and 18 times Gravita. So despite the movement, the stock is trading at a low or discount to its peers despite having higher ROEs. Back to you.